Hey everyone, hope you all are doing well. Lately, companies in the chemical sector in India have seen a subdued demand for their products. Revenues for a lot of companies have dropped, there has been an increase in the cost of raw materials, and to top it off, the Red Sea crisis has impacted the turnaround times and the logistics cost. Due to these headwinds, the margins for most chemical companies have shrunk and a major correction has happened in the stock prices of these chemical companies. After hearing out some of the interviews of the top management of these chemical companies, I reckon that a recovery can be expected from this situation after the second quarter of FY25. Now this makes the next 4 to 5 months a suitable period to accumulate some of the good quality chemical stocks. So in today's video, I'm going to share with you 3 chemical stocks that I feel have good fundamentals and have the potential to give 12 to 15% CAGR returns in the next 5 years. The objective of this video is not at all to give you any stock recommendations, but to give you a starting point of research so you can consult with your financial advisor and evaluate whether these stocks would be a right fit for your portfolio and that they match your risk profile. In case you are new here, then do consider supporting this channel by smashing that subscribe button. So the first stock in my list is Navin Fluorine International Limited. Navin Fluorine is basically involved in the business of fluorine chemistry. They have an experience of 50 plus years in manufacturing world-class fluorochemical intermediates. They have an R&D center in Surat by the name of Navin Research Innovation Center, which helps them to continuously work on advanced applications of fluorine chemistry and also to improve efficiency in the processes. Their subsidiary company in the UK, that is Manchester Organics, which they had acquired in 2011, helps them to further strengthen the R&D capability to undertake more complex fluorination projects and increase its pipeline of specialty fluorochemicals. The company's 4 manufacturing facilities are strategically placed close to the ports so that import of raw materials and export of finished goods can be done with ease. Let's now take a look at the product portfolio of Navin Fluorine. Navin Fluorine is the first and only manufacturer of HFO, that is hydrofluorolefins, in India. The company is also the first mover in the manufacturing of R22 gas and also manufactures R32 gas. Now all 3 of them are actually used as refrigerants in air conditioning systems and commercial cooling systems. In the future though, I feel that the company may increase the focus on HFO because unlike R22, it has zero ozone depletion potential and ultra low global warming potential, and unlike R32, it is only mildly flammable. The company is also one of the largest Indian manufacturers of anhydrous hydrofluoric acid and diluted hydrofluoric acid. At the same time, they also manufacture inorganic fluorides such as ammonium bifluoride, potassium fluoride, sodium fluoride, etc. The acid and inorganic fluorides are used in various end-use industries such as oil and gas, pharma, agrochemicals, stainless steel, electronics, and solar energy industry. Now, other than these, the company also caters to life science, crop science, and performance material industries by offering them fine and specialty fluorochemicals. Since demand for specialty fluorochemicals from the downstream agrochemical and pharmaceutical sector is on the rise, the company estimates a growth potential of 15 to 20% in the specialty chemicals market in India. Lastly, the company has also scaled their CDMO business to cater to the growing willingness of global pharma players to outsource their products from reliable Indian companies. The willingness has increased after most pharma majors are taking a step to adopt a China Plus One strategy to reduce the over-dependence on China for their products. Navin Fluorine has also built India's only plant with high-pressure fluorination capability with CGMP compliance to further scale up the revenues from the CDMO business. For those of you who don't know, CGMP compliance are basically the regulations that are set by the US FDA. Navin Fluorine is positive towards future growth and so it is actively doing capex spends. The company is investing 450 crores to set up a new 40,000 tons per annum hydrofluoric acid capacity in Dahej in Gujarat. It is also making an additional capex of 84 crores for capacity expansion of 4,500 metric tons in R32 gas. Also, the company's board has approved a capex of 288 crores to build a CGMP facility in Devas to meet the needs of the European API customers. If you look at the financials of the company, then the 5-year compounded sales growth has been 18%, the 5-year compounded profit growth has been 15%, and the 5-year return on equity has been 19%. While foreign institutional investors have reduced their stake, the domestic institutional investors have increased their stake in the company. If we see the share price of the company, then there has been a correction of close to 35% from the 5-year high point. Clearly, the stock is available at a much better valuation than before, and further dips would present a great buying opportunity for investors. Moving on, the second stock in my list is PI Industries Limited. PI Industries is a global agrochemical and life sciences company established in the year 1946. It is a major player in India's crop protection market and manufactures a range of insecticides, herbicides, fungicides, and biostimulants. In the recent years, the company has also ventured into active pharmaceutical ingredients and CDMO business by acquisition of Archimica and Therachem Research Medilab respectively. Archimica SPA is an Italy-based small molecule API manufacturing company with over 60 clients in 30 plus countries. Therachem Research Medilab, on the other hand, has working relationship with marquee publicly listed US biotech and pharma majors to help in contract research and development of early and late stage drugs. PI Industries have 5 formulation facilities and 15 multi-purpose plants across 4 manufacturing locations. They have an R&D facility at Udaipur which houses a strong R&D team of 700 plus scientists and researchers, including 200 plus doctorates. Also, PI Industries has built an integrated pharma research center in Hyderabad with the aim to focus on clinical research and contract development and manufacturing across the entire pharma value chain. In the 9 months of financial year 24, the company has filed for 11 patents, which takes the total number of patent files to 155. The focus on intellectual properties such as patents helps PI Industries to drive differentiation in the marketplace. At the moment, PI Industries has 50 plus products at different stages of development in the pipeline, and they aim to commercialize 4 to 5 products each year to increase the production activity and revenue streams. With rising population, rapid urbanization, and increased expenditure on food consumption, there is an urgent need to address food and nutritional security. At present, there is 29% loss of yield on average to weeds, pests, and diseases. PI Industries, through its products, is not only focusing on crop protection but is also focusing on soil enhancement to increase productivity. The increased productivity at existing farmlands is helping to tackle climate change as well, because there is less need to convert forest into farmlands, and thereby it reduces greenhouse gas emissions. PI Industries is optimistic towards future growth and is choosing to grow through both organic and inorganic routes. In the latest quarterly report, the company has mentioned that 900 crores of capex has already been done in the 9 months of financial year 24, and the company is also actively evaluating inorganic growth opportunities. If you look at the financials of the company, then the 5-year compounded sales growth has been 23%, the 5-year compounded profit growth has been 28%, and the 5-year return on equity has been 18%. While domestic institutional investors have reduced their stake, the foreign institutional investors have increased their stake in the company. If you look at the share price of the company, then it is mostly trading in a flat line despite the P ratio being much lower than the median P. Unlike other chemical companies which are struggling in this period, PI Industries has shown remarkable resilience by growing the EPS of the company. Now, before I move on to the last stock in this list, do like the video and hit that subscribe button, as it really helps to trigger the YouTube algorithm, and this video then gets recommended to a wider audience. So the third stock in my list is Deepak Nitrite Limited. Deepak Nitrite is one of the fastest growing chemical intermediate companies that has quite a diversified portfolio. The company has a legacy of 5 plus decades and it serves more than 1,000 customers across 45 plus countries. You can see on your screen name of some of the marquee customers of Deepak Nitrite. They have 6 modern manufacturing units to manufacture 30 plus high quality products. The company is one of the largest producers of sodium nitrite, phenol, and acetone in India. In the domestic market, Deepak Nitrite is a dominant player with 70% market share in sodium nitrite and 56% market share in phenol, acetone, and IPA. For some of the products such as oximes, cumidines, and xylidines, the company is among the top 3 global players. Deepak Nitrite's business can basically be divided into 2 business segments. The first business segment is advanced intermediates, wherein the company manufactures chemical intermediates such as sodium nitrite, nitrotoluidines, fuel additives, nitrosyl sulfuric acid, specialty agrochemicals, oximes, etc. 5 of the manufacturing units of the company are involved in manufacturing these advanced intermediates. This helps Deepak Nitrite to cater to 56 plus applications worldwide. Application diversity of these chemical intermediates include colorants, petrochemicals, rubber, agrochemicals, pharmaceuticals, glass, textile, industrial explosives, fuel additives, etc. The second business segment of the company is phenolics, wherein the company manufactures phenol, cumene, acetone, isopropyl alcohol, and alpha-methyl styrene. The entire phenolics division manufacturing happens at the Dahej plant in Gujarat. Application diversity of these phenolics include laminate and plywood, automotives, construction, adhesives, rubber, paints, etc. Deepak Nitrite has signed an MOU with Government of Gujarat for 14,000 crores to set up a new greenfield project to manufacture advanced intermediates, phenol, acetone and bisphenol A. The subsidiary company Deepak Chemtech Limited has also done a greenfield project to venture into the polycarbonate business. This will help the company to cater to specialized demand in new age applications such as 5G boxes, EV batteries, medical devices, etc. Recently, the company has also commenced its first fluorination plant at Dahej in Gujarat to start making a new revenue stream from fluorochemicals. One of the upcoming projects of Deepak Nitrite is the nitric acid plant, where the on-site construction is complete and a rapid progress is being made towards mechanical completion. Another upcoming project is a solvent plant for MIBC and MIBK, which will be commenced in financial year 25. If you look at the financials of the company, then the 5-year compounded sales growth has been 37%, the 5-year compounded profit growth has been 59%, and the 5-year return on equity has been 32%. While foreign institutional investors have reduced their stake, the domestic institutional investors have increased their stake in the company. If you see the share price of the company, then there has been a correction of close to 26% from the 5-year high point. From a long-term perspective, a good revenue growth can be seen for the company due to its entry into the polycarbonate and the fluorination business. So there it is. These were the 3 chemical stocks that I'm going to accumulate in the next 4 to 5 months. Further dips in the share price of these companies will only make them available at better valuations. Don't forget to do your own research and get in touch with a financial advisor before making any investment. Hope this video was able to give you valuable insights and you were able to learn something new today. Thank you so much for watching. Like the video, hit that subscribe button and stay tuned for my next video.